Tesla's price jumps up from the previous slump as Tesla bulls prepare for a huge bull run for Tesla stock coming soon. I'll be breaking down everything you need to know in this video, so let's get right into it. Welcome to Trade Daily, where we break down all the best stock market news. Like and subscribe to keep up to date with the stock market. And I really hope you enjoy this video. As it turns out, all Tesla stock needed was an Elon Musk-caused Twitter overhang for the company's bulls and bears to agree. After shedding over $700 billion in market value since hitting all-time highs in early November last year, both bullish and bearish analysts recently suggested that the electric vehicle maker is poised for a potential comeback. Citigroup analyst Ide Mikely posted what could only be described as a surprise on Wednesday after he upgraded Tesla to a neutral rating. Mikely has long been a Tesla bear, giving the electric vehicle maker a sell rating since 2019. Even amidst Tesla's massive rise from 2020 to 2021, the Citigroup analyst was among those who maintained a sell rating on the stock. Yet, in a note on Wednesday, Mikely boosted his Tesla price target to $176 per share. He also argued that the electric vehicle maker's year-to-date decline of nearly 60% has effectively balanced out the near-term risk/reward for Tesla investors. To be sure, macro/competitive concerns are likely to remain an overhang with capacity rising, but as we've previously written, in a hard landing scenario, Tesla's long-term competitive position likely also improves and potentially further enhanced by President Joe Biden's Inflation Reduction Act, the Citigroup analyst wrote. Tesla bull Adam Jonas of Morgan Stanley seems to be on the same page. Jonas carries an overweight rating and an optimistic $330 price target on Tesla, though he noted that the company is exposed to a number of risks. These include CEO Elon Musk's distractions from his acquisition of Twitter, as well as challenges in countries like China. Despite this, Jonas noted that Tesla seems to be on pace to grow its sales by about 37% next year, while generating about $15 billion in free cash flow. Overall, the Tesla bull noted that the Texas-based electric vehicle maker is still well-positioned in the EV market, especially as the United States adopts the rules of President Joe Biden's Inflation Reduction Act. We believe Tesla's gap to competition can potentially widen, particularly as EV prices pivot from inflationary to deflationary. With respect to the Inflation Reduction Act, we believe Tesla is by far the best-positioned OEM in terms of potential eligibility for consumer tax and production credits, Jonas wrote. So far, Tesla stock appears to have calmed down somewhat, with Tesla shares ending on the green on Tuesday. Tesla stock is also up 2.76% on Wednesday's pre-market. Tesla's investor relations head, Martin Vaicha, shared that the Tesla Semi may be his favorite Tesla product. Most people in the investment community, including large holders that I speak to, didn't believe it's possible to make a 500-mile fully loaded Class 8 truck, he said on Twitter. Tesla has had many critics and skeptics alike agree that it would never succeed. A great example is the Tesla Model 3, when many thought Tesla would never bring the vehicle to mass production. As for the Tesla Semi, it was unveiled in 2017, and PepsiCo will be the first customer to take deliveries on December 1, 2022. In 2020, Bill Gates wrote a blog post explaining why battery-operated Class 8 trucks wouldn't work. How many times have we fallen for this? The problem is that batteries are big and heavy. The more weight you're trying to move, the more batteries you need to power the vehicle. But the more batteries you use, the more weight you add and the more power you need. Even with big breakthroughs in battery technology, electric vehicles will probably never be a practical solution for things like 18-wheelers, cargo ships, and passenger jets. Electricity works when you need to cover short distances, but we need a different solution for heavy, long-haul vehicles. Gates said that he was optimistic about biofuels, but that it was still too early to consider replacing fossil fuels with them. Gates was one of many critics who shared opinions as to why the Tesla Semi and all-electric trucks wouldn't work. On December 1st, the skeptics will be once again proven wrong when PepsiCo takes delivery of its order of Tesla Semis. Tesla is inviting a limited number of retail investors to the event, which will take place at Gigafactory, Nevada. And when Kathy Wood's ARK Invest heard this news, she then loaded up on Tesla shares in its innovation, next-generation internet and autonomous technology and robots ETF on Wednesday. The company's three funds saw a buying opportunity in the automaker's recent slump on Wall Street. ARK Innovation ETF bought 27,594 shares on Wednesday, while the next-gen internet and autonomous tech and robots ETF gained 2,909 shares and 9,173 shares, respectively. Tesla shares have slid over 15% in the last 5 trading days and nearly 47% in the past year for various reasons. Most recently, the stock's performance has been highly affected by CEO Elon Musk's purchase of social media platform Twitter, which has put many investors in a tough spot determining whether the company is the primary focus of its leader's current endeavors. However, investors have looked at it from different perspectives. While ARK continues to buy up shares, others are changing their outlook on Tesla stock, at least in the short term. Dan Ives of Wedbush is one of the analysts changing their perspective on Tesla, at least temporarily. Tesla stock was removed from the firm's best ideas list, as Ives wrote in a note to investors. Our near-term view of this name is increasingly becoming more challenged. The longer-term bullish view of Tesla remains generally unchanged, as we believe the EV demand and production story are still in the early days of playing out as part of a massive transformation to the auto world. Ives reiterated his $250 price target and an outperform rating on Tesla shares, which closed at below $180 yesterday. At the time of writing, Tesla stock was up 6%, trading at around $188. The stock has traditionally been met with volatility since the Musk Twitter saga began, and with the majority of his tweets now promoting new ideas for his newest venture, investors are skeptical. Musk has essentially tarnished the Tesla story/stock and is potentially starting to impact the Tesla brand with this ongoing Twitter train wreck disaster, Ives said. Perhaps some of the most piercing words of the note from Ives were that Musk has done what bears have unsuccessfully tried for years, crushed Tesla stock by his own doing, what we view as a purely painful dark situation. Nevertheless, Tesla's perma-bulls continue to attach themselves to the company's thesis. ARK remains bullish on Tesla. Tesla stock popped over 6% on Wednesday after several positive signals elevated the electric automaker's stock price. After Tesla stock has taken a monumental beating over the past few months, is this the end of the slide? Tesla shares were trading at around $180 per share at the time of publishing on the East Coast. Shareholders have been battered on Wall Street due to challenging market conditions and Elon Musk's Twitter acquisition. Over the past 6 months, Tesla shares are down 19.64%. On Wednesday, several positive developments triggered a slight increase in Tesla's share price. Tesla could look at another market for its next automotive production facility. After rumors indicated Canada would likely be the place Tesla built its next Gigafactory, Musk reportedly indicated South Korea as a market the company could entertain as a new manufacturing location. President Yoon Suk-yeol said Musk was favorable about South Korea's potential as Tesla's next Gigafactory location during a recent video call. Additionally, Citigroup analyst Ide Michaely upgraded his outlook on Tesla shares to a neutral rating despite holding a bearish forecast for several years. To be sure, macro/competitive concerns are likely to remain an overhang with capacity rising, but as we've previously written, in a hard landing scenario, Tesla's long-term competitive position likely also improves and potentially further enhanced by President Joe Biden's Inflation Reduction Act, Michaely wrote in a note to investors. Whether Tesla stock slide is over remains to be seen. Investors have had enough and have banded together in the thousands to influence Tesla to perform a stock buyback. Tesla bull and institutional investor Gary Black has said it is the right time for the company to perform a buyback, as its price-to-earnings ratio is the lowest it's been since COVID. Other analysts, like Wedbush's Dan Ives, said his firm remains bullish on Tesla, but overhang from the Twitter deal still remains. There is the potential that Musk may need to sell more stock to secure financing for the Twitter deal, which leaves uncertainty for some investors. Additionally, Ives' concerns regarding Tesla's brand deterioration still remain, and the CEO evident focus on Twitter leaves Tesla in a difficult spot moving forward. Ives maintained a $250 price target and an outperform rating on Tesla stock. If you agree, comment down below. Or you might agree with this other top investor's incredible prediction for Tesla. Watch this vid here to find out.
And with that, we've come to the end of the video. I'd like to give a huge shout out to anyone who's made it this far. I hope you enjoyed the video. I'd also like to make it clear that this is a news and entertainment video, not investment advice. You should always do your own research and speak to a financial advisor before making any investments. Thank you all so much for your support. Don't forget to like and subscribe for the chance to win up to $20,000 in Amazon gift cards, and we'll see you in the next video. If you want more crazy trade news, how about this video we did?